President Biden releasing up to 15 million barrels from the Strategic Petroleum Reserve. Brian saying it's not new barrels, it's just kind of releasing the barrels that were already planned to be released. But I have to ask you, how do you think that impacts the price of oil? Does it change the price targets you have?
No, it really doesn't. The one thing it does, which I think is interesting, is for the first time we're seeing the White House talk about refilling the Strategic Petroleum Reserve. And I think that's what's important in that announcement, is that now the U.S. government, in a way, is also coming up with measures to support the oil price. And about a month ago, we put out a piece entitled 80 is the new 60 for oil. And the argument there is that now you have OPEC likely set up to cut production aggressively on the back of any weakness in prices. But also now we have the U.S. government arguing that if prices do drop to the $70 or so range, we are going to see purchases to refill that strategic reserve. So you have two very strong puts, if you like, that have now kicked in the market at a much higher rate than in the past. So I think that's important for investors, and I think will help just the energy sector advance in their investment plans. So in a weird kind of way, the U.S. government has aligned itself with the OPEC policy of just trying to keep somewhat higher price in the long run for investment purposes.
All right, as we mentioned, oil prices are up today. WTI up just about 2%, Brent crude up 1.5%. I want to ask you about some of the other news that we were talking about this morning. China, we're seeing over there moves to potentially reopen, but at the same time, delays on economic data and concerns about a slowdown in China. So two different forces. China, obviously a very big oil consumer. How does China play a factor in oil prices going forward for the rest of the year?
It is a critical factor beyond those that you mentioned, which I think are the biggest one is kind of the Russia OPEC situation into year end, which we think is a swing of 1 to 4 million barrels a day on balances, depending on how things go. China's the second biggest delta, and we think it could be a swing of 500,000 to 1 million barrels a day. Remember, the Chinese oil demand picture this year has been very poor. We've had a contraction of 2.4% or 400,000 barrels a day, which is the first contraction in oil demand in China in 20 years. So that's important, what happens next to China. We expect demand to grow by 800,000 barrels a day next year, recover above last year's levels after having dropped this year, of course. And again, it's a big swing factor. The one thing I'd say is that if you listen carefully to Xi Jinping's speech last weekend, he did not say he was going to maintain zero COVID policy. He did say, however, he was very proud of it, and he was very proud of the way that China had handled the pandemic. But he didn't say he was going to maintain it. So I think that's why the market might be getting a little more excited about the China comeback. And remember, we've had 1.4 billion people pretty much in a 3-year lockdown. So it could be a big swing for global demand for transportation if China reopens here.
All right. Well, last question. Natural gas up almost 1.5% this morning. What's the outlook for natural gas?
Natural gas is at this point is purely a weather play. Remember, weather forecasts are typically good for about 2 weeks. That's how much we can really forecast weather ahead of time with some accuracy. And now the market's kind of looking at early November. And in the case of Europe, we've seen somewhat warmer weather. So we've had TTF prices, the European benchmark roll off. And in the U.S., well, same thing. We initially had some warmer weather forecast, but now things are getting colder. So we had a modest uptick here. But weather is really looking at November natural gas looking at November to really price itself over the course of the next couple of weeks.